Hey, it's Mike Hambright with FlipNerd.com. Welcome back for another VIP interview show. Today I have with me Jordan Fisher, who is a real estate investor, a mentor, an author, a broker, all sorts of exciting stuff. He's a private lender too, going to tell us some about that, primarily operating in Los Angeles. Before we get started, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Jordan, welcome to the show.
Oh, thanks, Mike. It's nice to be here.
Yeah, glad you're on. So we were talking a little bit before the show about your background, and really I kind of call it the evolution. And I think a lot of real estate investors have made that over the past few years, whether it's because of necessity of changes in their market. Heck, maybe a lot of people are going through that right now with markets tightening up in a lot of areas. But I know you kind of started off as an investor and worked your way through a number of different things through brokerage, and then ultimately putting a lot of focus on the lending side now. Yes. But why don't you introduce yourself, and then we'll talk a little bit about kind of how you've evolved over the last several years.
Sure. My name is Jordan Fisher. I'm in Los Angeles, Pasadena, actually. I'm the managing partner of Inspire Capital, management group, Inspire Capital. I used to be, I still do, I have a thriving real estate investing business that I've had for quite a while. And yes, you're right. I think I just really enjoy the lending side. I think, don't get me wrong, I love the rehab side and the wholesale side, and we still do a lot of that. But I've always thought it's a little opportunistic. I think as we were talking, it's a little bit, it's like brute force. You know, sometimes realtors are like that. Realtors, you get the deal, you get the listing, then you're like, oh, where's my next listing? Right? When you get paid, you're like, oh no, where is it? So although we've done a lot of volume on the investing side, I think I just really like the coaching side. I do a lot of mentoring. So the investing side, I think a lot of people don't realize that when a fund or investor lends money out, the investor or the fund typically makes more money the quicker the money comes back. And the person that the money was lent to, they pay less interest the quicker it comes back. So for me, it's like a win-win situation where I really get to help someone, help another investor, help a peer make as much money as possible on a rehab. So I really love the private money side, and I'm just enjoying it.
Yeah. And why don't you tell us a little bit about, from your investing side, what do you think is going on in California right now, or in the markets you serve? I mean, I know a lot of markets have tightened up here. We're coming up on summer 2014 here, and markets have tightened up a fair bit. Why don't you tell us a little bit? And obviously, there's I'm going to screw up this quote, but something like I'm not even going to try to do it. Something to the effect of what's going on in California will then make its way across the market, across the country. Right. And so why don't you tell us what you're seeing out there?
Yeah, and we do a lot, both lending, probably 65% of our lending business is in California, and my investing business, I'd say probably 75% is in California, some in Nevada, and some in the South. Yeah. In Los Angeles, we had went up 25% last year. I mean, right. Los Angeles, it's been a while since it went up that high. So, but because of that, it went up so quick. And in LA, Hollywood, people have a short memory. And people just get used to what it's been like, and so it's right. And so realtors still are saying today like it's going to go up another 25%. So right. It's just ridiculous. I mean, the market has definitely flattened since about November of last year. Okay. Not really going anywhere. Doesn't look to go anywhere. Inventory is still relatively low, but and I think across the country it's starting to. You're seeing that low inventory, but it doesn't mean prices are going. You don't have as much urgency from the buyers anymore. Yeah. So you have to use a lot of different things, especially when you're selling properties, to really get the results that you want.
Yeah. From a selling standpoint, I mean, I know that you're known for selling properties quickly, and do you want to share some information on real estate investors and how they can sell their properties quickly?
Well, it's just from the investing side, and especially, to be honest, from the lending side, I see it so often that an investor's rehabbing a property and they just can't sell it, or they're holding on to it too long, or they're leaving money on the table. They're not selling it for as high as they could. They're not selling it for as fast as they can, and they're not having control over the deal. that's what I see. I just think there's a lot of real estate investors who have hope. I call it hope. Like, and I always say, just to keep it like simple and like on the down low, hope costs money.
Yeah.
It costs money. Hope is a good thing when you can give someone else hope. Right, your business can give someone else hope. I think that's a great thing. A lot of real estate investors kind of use that some way, especially in the distressed property market. But you don't want hope in your real estate business. Hope is not a business term. Yeah. And I talk to a lot of real estate investors, very seasoned ones across the country, and a lot of them say, I don't have hope. I've got systems. I don't have hope. You know, really? Well, you know what? When you sell a property, I mean, you list it for a certain price, right? And they go, yeah, sure. And they go, yeah, we listed a good price. They go, great. And you hope, right? You hope that you get offers. You go, no, we get offers. I go, okay, great. Well, you're hoping you get like a lot of offers. And they go, yeah. And I go, and you hope that they're good offers, right? And they say, yes. And then what? And then say, oh, then we counter people. And I go, okay, great. And then you hope that they come back, and you hope that their loan closes, and you hope that they don't find anything in their inspection, right? And you hope they don't give you problems during the escrow. And they go, yeah, but I mean, everyone has that. Absolutely not true. And I think the more you understand this concept of how to eliminate hope from your real estate business, the more control, and to be honest, the more fun you have when you're selling properties. Because for me, I just like to have people say, especially realtors, but investors too, like the three biggest words in real estate all start with an L, right? But it's not location, it's leverage. So I always say, like, you've got to put leverage at every step in a deal, especially when you're selling properties. Anytime you take a step forward, that means listing the property, that means taking a call on the property, that means in your description of the property, that means when you show the property, how you show it. If you don't proactively put leverage in play on your side, you're letting a little cockroach of hope like enter your deal. And it enters like this, and sometimes you don't see the cockroach. It kind of crawls under the wall and you never saw it. But it's there, and I guarantee you it's going to come up later in your transaction. And the more you don't put leverage, there's more cockroaches come in, and when they come up big, and that's,
So give us some examples of what you're talking about. Obviously, leverage and financing your deal, everybody gets that. But in terms of the selling and the other parts you talked about, give us some examples.
Yeah, sure. Leverage, like when you're selling a deal, means this. Like the normal way to sell a deal, even for a real estate investor, typically, if you're not wholesaling, right? If you're selling it on the retail market, but even if you're wholesaling, but I'll just give a retail example, is to list it on the MLS or to show it is listed as many places as you can and get as much audience as you can to look at the property, right? You want to open it up to the market. Well, a lot of people, especially real estate investors, because they get very personally involved in the deal, say, well, I bought at this price, I rehabbed at this price, I looked at the comps, and yeah, my house is great, it's totally rehabbed, it should be worth the top of the market, $150. So we're going to list it at $149. And it's silly because people think they have leverage or they think they have a great property. It's because they're personally involved. If they took a step back and said, I'm just going to act like I'm a big hedge fund and I have 2,000 properties I'm selling today, that means I would not be personally involved, right? So I would do everything possible to sell the property without any personal feelings. So in that regard, you don't have leverage until you have an audience. It's like when you put on a theater show. You can do all you want and have a great show, but unless there's people in the audience, you don't have their attention, right? So you got to get their attention first. I don't care how you get it, you got to get it. But once you get it, that's when you can start putting leverage into play. So putting leverage into play would be like, for example, some people say, oh, then just put it at a ridiculously low price, which is true. Price will draw people to the table. And a lot of people think, well, if I put it at a low price, then they can never go higher. Or then I'm like branding the property as a low price property, or then people are going to think there's something wrong with it. And what I say is, does it really matter? You got to get their attention first. Once you have your attention with a low price, then it matters. I always say price at 5 to 7% below the market value. Some markets you have to price at 10%, but I always say 5 to 7% below market value for the property. Enough so everyone in the market pays attention, thinks that, is there something wrong with the property because the pictures look great? Or is the seller really motivated? There's something strange with this property because that price looks ridiculously low.
Yeah.
That's all you want. And once you have their attention, it's really what you communicate why it's priced the way it is. And if you communicate in a certain way why, you can establish leverage from the start. And once you have leverage from the start, you can take control of the transaction all the way through.
What's an example of why you would price it that, or why you would say you're pricing it to at that point?
Yeah, because you run a tight ship. Because we're going to let the market decide. We're not going to fool around. The seller, you have to say it is priced ridiculously low.
Yeah.
My phone's been blowing up, right? Everyone's calling because it's priced ridiculously low. We're just going to, the seller decide. They're going to let the market decide. We're going to have an open house on this day. Everyone's going to come and make an offer. They'll get counters in a day, and we'll let the market decide what it's going to pay for.
Yeah.
what it's going to sell for. And when you
Yeah.
do that,
Yeah.
you take your personal opinions out of it, and you just let the market dictate what's going to happen.
Yeah. And then you're saying in some instances that the price is going to get bid up anyway.
Oh, it is going to get up. I always
Yeah.
say, look, when you put a sign up or a list price, it's not really a price. It's just a sign. How big a sign do you want to put out there? You put
Yeah.
a high price, it's a little sign like this. You put a low price, it's a big sign. It doesn't matter if people say, I'll take your property for $1. I
Right.
could care less. All they're doing when they make a bid is say they want a seat at the table.
Yeah.
And to be honest, if you price it right, it's a bell curve all the time. What happens is 60% always put it at right at whatever price you put it at. 20% usually put it like low, like trying to lowball it even further because they think there's something wrong. And 20% try to put it higher to steal it before there's a bidding war.
Right.
That's a very common bell curve, and that's what you want. And then from there, now you have an audience. Now you can go like this, and now you can get all set, and now you can manipulate the market to do what you want to create.
Yeah. You know what's interesting? I was just talking to some folks. This is, I'm sure this is not just in my market, in a lot of markets, but some agents are, especially if they have FHA buyers, they're offering above list price to kind of lock it up, knowing that it's probably not going to appraise for those levels anyway.
That's right.
In fact, we're kind of a victim of a deal on that, recently in the past week or so, that we're like, we sold it for, we listed it a little bit high, but we got full price for it, but later it came back to be appraised. So we're not so much a victim, but there's some people that are offering, 5% above list price just to get it locked up and letting the dust settle where it may with the appraisals.
Right. See, and if you let the dust settle where it's made, that means that the investor is out of control. That means that you're hoping it settles in your favor.
Right.
That's why a lot of agents like to say, well, what do you want for the property? Why don't you just tell us a number? And if my client agrees to it, fantastic. You know what happens if I put a list price out at 150 and I really want 170 and I get offers in and then I counter 170 and someone says, oh, here's 170, and we go, great, handshake. And I think as an investor, most investors think, great, I got what I wanted. That's the worst news you could hear. You know why? Because now you were up here and now you're even again.
Yeah.
Because you just handshook in the middle and said, I want 170. You're willing to pay 170? Fantastic. Now we're even again. You know what? They're going to beat me over the head on the inspection or in the estimate because I have no leverage on them. I always want to keep a lot of leverage on them, even when I accept an offer, a lot of leverage, so they will never give me a problem during the escrow.
Yeah. That's interesting.
It's just, and it's more fun, to be honest. Once you do it one time, you'll be like, oh my God, I loved it. And you know, all the agents on the other side and the buyers will hate it. That's perfect. But when it closes, they will all look back and say, I respect what just happened because I was out of control, and God, I want to do that on my next transaction. That happens every time. Yeah.
Wow. So as you've kind of moved more into the lending space, it's interesting over time. I've seen, I always appreciate people that have a background as a real estate investor that are lenders. And I personally, don't use a lot of hard money. I have access to some private money and banking relationships and things like that. But anytime I recommend hard money lenders, it's people that have been in the business themselves and they understand what that person's going through versus just the financial guys that have access to capital but don't really get the business and are enamored by potentially high rates of return. And you said something early on about how you effectively help coach people that are borrowing from you as to what they may do right or wrong or different things they can think about to sell it quickly or save money. Talk a little bit about that kind of relationship intertwined with a lender and a borrower, because that is fairly rare.
Sure. I was on, and I still am, a real estate investor, right? And I was on that side for, the last 8 years. So I used to borrow from funds all the time. I used to borrow from hard money lenders all the time. In fact, I know, especially in Los Angeles, I know most of the hard money lenders, big and small. And I'll tell you what, 97% of them are Wall Street guys. They're financiers, right? Who have capital, usually from Wall Street or other people, and they lend it out. I like to call it passive capital. They're lending out passive capital because they're uninvolved. They lend it out, and you never see them again until there's a demand at the escrow when it closes, or the title company when it closes. And we just don't do that. It's like the passive capital, it reminds me, it's like an out-of-shape athlete, like third string, waiting on the sidelines that never really gets involved. You make the loan and just kind of sit and just wait for the close and go, here's my demand. Unless there's a problem. Right. We do it differently. I mean, that's one of the reasons the private mortgage pool fund I run is called Inspire Capital. It's because we're inspired by our clients, and we like to think our involvement in their success inspires them. So what we do is we make a loan, and then we stay in touch How's the rehab going? Are we still on track to take 3 months, 4 months? What are you listing it at? How's the sales process going? You know, you want to send pictures, anything else? Just, you know what? Because the more I help, a lot of people don't realize, I think we were talking about this earlier, when a private lender or a fund makes a loan, the quicker the money comes back, because all the points and all and interest in the beginning, the quicker it comes back. It's like a car loan. The quicker it comes back, the more money the fund makes. Yeah. And the quicker it comes back, the less interest the investor pays, so the more profit the investor makes. So it's a win-win situation. So for me to like help coach or get involved to help is like a big plus. I want the person to do well. I want them to sell the property quickly for as much as they can and get the money back quickly. That way I can turn it quicker. And that way too, when I keep in touch with people, number one, I know if there's a problem and I can kind of head it off or try. Number two, I kind of know like the planning of when it's coming back, so I can like, you know, schedule accordingly when, you know, our cash flow, so I know, you know, what's coming in the pipeline to kind of fund other people. Right. So it makes a lot of sense, but I would say, to be honest, it's very unusual the way we do it. I think I probably just do it this way. So does my partner, just because we love to educate and coach, and we're in the business ourselves. So for that reason, we're just very involved. I don't know.
Yeah. And I got to believe from a borrower's standpoint, they would appreciate having somebody that they can talk to or can give them recommendations on, you know, what to do, because they have experience in the business. Yeah.
You know, and if there's a problem too, you know, we don't, you know, our business, we only work with people we know. We only work with people who are referred to us, and we do all like referral business. The last thing I want to do is that I want to have happen is have a person who has a huge problem and it's just nothing's working out, and we end up, I guess we'd have to end up foreclosing on the property, and then we never have that client again. It's in my best interest to try to help them, no matter what it is, get through it and do whatever I can, work with them to, you know, to get the property sold and the loan paid off.
Yeah, I have a lot of friends that are hard money lenders, and they say usually, you know, they don't do what you do, that I'm aware of, and I think they purposely try to stay at arm's length from folks because they don't want to say, well, you told me to use this contractor, and I'm not saying that you do that, but they don't want to enter themselves in maybe being a scapegoat as to why something didn't do well. But, you know, they'll tell you, these guys have told me that probably more than half of the people that default, they can't find. They disappear because they're embarrassed, or they want to pretend it didn't happen or whatever. And so if you're kind of building that relationship along the way, and you know, they've also told me that the people that they are in touch with, they figure out a way to make it work and say, look, just deed it back over to us, or here's how we're going to go through this. We're not going to foreclose, because they don't want to foreclose anyway. I mean, it's a lengthy process. But the people that, you know, really cause a lot of disruption are the ones that disappear. They just...
You hit the nail on the head. That's exactly it. Clients who don't communicate, we do not work with. Period. Period. Yeah. Clients that communicate, we have a great relationship with, and everything works well. But yes, a client doesn't communicate, and that does happen. When they don't communicate, in fact, that's always a sign. We haven't talked to someone in a week or 2 weeks or something like that. That's always a sign that there's something is wrong. And it's okay if there's something wrong. We just need to know so we can try to help.
Yeah. So why don't you talk a little bit about the relationship with between a hard money lender and real estate investors? I think a lot of there's kind of two different ends of the spectrum. Some people that say, I will never use hard money because it's so expensive. Yep. And then there's people that say, why would you use your own money? Just lever that up so you can do more deals. Right. And why don't you talk about kind of that relationship between a borrower and a lender, and where you see that it makes most sense?
That's a really good question, Mike, you hit on there. I think it really matters on the individual. Yes, private money can be expensive, but I don't really think it's expensive. It's really commensurate with the risk. A lot of people don't realize that. It's commensurate with the risk. Obviously, if you're putting more money down, it's a lot less risky, so it's not going to be very expensive. But the less money you put down, it's obviously going to be more risky, so that risk has to be built into the pricing, right? So, and I like to think private money more than, I don't even like, we don't call our fund hard money, it's private money. Hard money is the passive, like here it is, and I come back for the demand, and here's the demand.
Right.
So the private money means, we have a private relationship that I can help you. So I like to think of it more as convenient money. I mean, all the people we fund, they don't do one deal at a time. They have 3, 4, 5, 6, 10 deals at a time. And you know what? It's not they don't have their own money. It's just cash flow is always an issue when you have that many properties. And convenient money is better than cheap money any day of the week. When it's there and it's quick and it's convenient, it's great. So in terms of using your own money, yes, people try to leverage, and always, most 90% of people try to see, well, how much money can I get? Right? It's all about that. It's not how much do I have to put down, how much money can I get, and then I'll decide.
Right.
And it's because they don't want to use their own cash. Well, there's a good and a bad. I mean, it depends on the personality. Some people, I think, if you if they don't have any money in the deal, they're just not as motivated to finish quickly or not as motivated to treat your money as if it's their own.
Right.
So one of the things that we always try to get, and why we build relationships, is we want to know that every borrower treats the money we give them as as if it's their own money. And if they do, fantastic. I just know from experience, and I'm sure you know too, that just things work so much better when people treat it as their own. If you're just, it's like if you're in a deal with 10 partners and you're only getting 10% of the deal, you're like not maybe as motivated to like act on something today or make it a priority or like make that extra call or go for that extra thing or do whatever you have to do, because at the end of the day, it's not going to affect you that much. There are some people who feel like if they don't have any money in the deal, that is the case, and you just that will be a problem.
Right. Right. So I know that you have a lot of experience in short sales as well, right?
Yeah.
Maybe not as much anymore, but what are your thoughts on what's happening with short sales in the market? I mean, are they going to, on one, and I know this is different by geographic area. I've heard some people say there's more short sales in some markets because there are less foreclosures, so the banks are working it out. Then I've heard some people say even the short sales are drying up and there's really not a lot of deal activity. I mean, there's people that were a one-legged stool, all their deals were short sales, and those people are struggling right now. So what do you think is going on, at least in California, with the short sale market?
Yeah, I think like in the hardest hit markets, right? Like the LAs, the Vegas, the Florida, place in Florida, a few other parts of the country. Short sales are going to be there. I'll tell you what. It's hard for me to say short sales. I'll say underwater, properties that are underwater, over leveraged. Because I think short sales, a lot of people think of it as a number, like is it worth less than what was loaned on the property? When I think that's just numerically, like logically, one way to look at it. The other way to look at it is what's happening in the market. Like even if someone is over leveraged or underwater in the property, do they want to short sell the property? Like what are the market conditions? Has the market gone up in the last year and people think it's going to keep going up, and so they're not going to short sell their home and just try to hold out as long as they can?
Yeah.
Do they think the market's going down and I better just get out now before the bank forecloses on me? Are the banks foreclosing a lot, or or has my neighbor been staying in his house for 2 years without making a payment? Like really think, and I think that's very local. I really, or nationally geographical located. I really think that's important in determining like what's happening. So for us, like in Los Angeles, short sales are a lot less prevalent. There still are, because of the sheer volume of the market, there still are a number of short sales.
Yeah.
Much harder to get deals on with the banks. Most banks run them much quicker, I think, than they used to before. But there's still laws are changing all the time, and bank incentives are changing all the time. So I think it's still a crapshoot. I think if that's all someone is doing, I think that's a problem.
Yeah. Well, Jason, if folks want to learn more about Inspire Capital, why don't you tell us a little bit of, first I was going to ask you how to get a hold of you, but tell us a little bit about where you lend. I know you do a lot of lending in California, but you lend in a lot of other states as well.
Yeah, all across the country. California about 65%, Florida 15%, I'd say, and the rest all around the country. It's really, really wherever we know. I mean, that's because of the volume, but also just because, again, the relationships I have across the country with people, wherever the investors are, is where we lend.
Okay.
It's really about the relationship.
Yeah. So how do folks get a hold of you?
Probably the best way, you can email me, Jordan, Jordan, at inspireinvestments.com. Or you can call me, 213-268-1896. Feel free. People ask all the time. We are more than willing to look at deals. I think that's what we do a lot. We just really help people because, again, we do this. I'm a real estate investor and my partner as well on the side as well. So we're like looking at deals all the time. We're willing to help. So when someone says, I'm buying it at this and selling at this, and here's the rehab money and the scope of the project, we always want to look at that and have a discussion, because we really have to have a discussion and agree on things. We want to help from the start. Yeah.
Awesome. And how about a website in terms of should they contact you directly, or you have a website for Inspire Capital?
Inspireinvestments.com. Actually, it's going up next week. We just redid it, so probably by the time this airs, it'll be up.
Yeah, absolutely. Awesome. Well, hey, thanks for your time today, sharing your insights on the market and hard money or private money. And all those other things. Definitely appreciate your time.
Oh, no, it's my pleasure. Happy to help.
All right. Take care.
Sure.
Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. you can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry. So get on over to flipnerd.com.